Hey, this is Asha. Thanks for joining me in today's video. And today what we're going to do is we're going to take a look at the top 7 sectors or kind of stocks to take a look at in the 2020 possible recession and things that usually hold up well throughout a storm. So stay tuned. I'm going to give you some thoughts and insights to this when it comes to your money and investing. All right, so before we get started, keep in mind if you want to check out our website, go to MyLittleNestEgg.com. And once you're there, there's going to be a freebies section that you could go ahead and download some things to be able to go ahead and make some extra side income here as we get into a possible recession or maybe even a depression. In either case, to get things started, I'm going to share with you some things regarding your investments. And if you're looking for possible area to place your money, these are a few great areas and sectors. So the first one kind of would be utilities. And if you take a look at utilities, stocks like Duke Energy, NRG, or AEP, or SO, Southern Company, are all pretty good areas. Energy companies like that usually hold out the storm pretty well. Why do they do so well? Well, it's because, well, people still need electricity. They need power. They need water to be able to make their household run and operate. They usually don't cut back on those things. If you're looking for a sector, then you can take a look at something like an XLU. Now, keep in mind, all these things that I'm mentioning, they're just examples and ideas. I'm not saying you need to go ahead and invest in these specific things. It's just go ahead and do your due diligence. I'm just sharing with you some examples regarding these companies or potential ETFs. So utilities is one of them. If we go ahead and check out the next one, military and defense, I mean, come on, the US doesn't really hold back when it comes to military and defense spending, and the government will just keep continuing to print money. So something like ITA, so that's iShares Aerospace and Defense, or XAR. This is Spider's Aerospace and Defense, or even a company like Lockheed Martin, LMT, could be a nice one to go in as you head into the 2020 recession here, or as people lose a lot of their jobs. So military and defense spending, anything like that, could be an interesting play for an investment. The other one is healthcare. There's a lot of things with the coronavirus. People, need more healthcare and health, and healthcare in the US doesn't look like it's going to be free anytime soon. Insurance companies are going to make a boatload along with a lot of the healthcare companies, so they'll just continue driving the price up. It'll be bigger and better for their profits. Unfortunately, it'll cost you more. Things like United Health, UNH, Boston Scientific, BSX, and Cigna SI for insurance companies could be an interesting play. And if you're looking for an ETF, VHT, Vanguard Health ETF, could be another one to look at, which is a little more diversified. If you're looking at low-cost retailers, this could be another interesting one that could be to watch. If you've noticed the run-on stores like Walmart, Costco, Kroger, these are pretty big run-ons to be able to get your groceries. A lot of people panic hoarding, stocking up on things. Also clothing stores like ROST, Ross Stores, or Dollar Tree, DLTR, could also be ones to watch here over the next few months, because as people cut back on their spending because they have less income, they'll probably go ahead and look to discount retailers rather than going full price to malls or big name box stores. If you're looking at high dividend stocks and funds, something like Johnson & Johnson or ExxonMobil, they pay some big dividends, but also a Vanguard high dividend ETF like VYM could be one to watch as well, which is already diversified on its own. So look to those because those are typically more stable. They pay high dividends, so they'll probably continue paying a good dividend because they have good cash flow on their books. They usually make products like baby wipes or lotions or things like that a lot of people still use in terms of their day-to-day life. Could be toilet paper, many things like that, thermometers, you name it. Anyways, Treasury Bonds is another one. Things like SHY, this is the iShares 1 to 3 year bonds, TLT, the Barclays 20-year bond, the VGSH, Vanguard Short-Term Treasury ETF, IEI, iShares 3 to 7 year Treasury bonds. So take a look at some of these different things like these Treasury bonds. Those could be an interesting thing to kind of also watch or invest in because, hey, if stocks go down, people will invest a little bit more when it comes to bonds. And Treasury bonds are usually a safe bet because what do? They'll print more money. And finally, commodities, things like gold, silver, that kind of stuff. GLD is a typical one, like gold. So GLD is a good ETF. IAU, also another one that people flock to. And then you got things like silver, SLV as well. But silver chart has been going a little bit more down. Anyways, you take a look and you do your own due diligence and you do your own, analysis. I'm just here to give you some thoughts and ideas and things to look at. So that way you can make your own logical decisions and choices about the future and with your money. Anyways, don't forget to check out our freebies here on our website at MyLittleNestEgg.com and just head on over to freebies. And of course, if you're new to the channel, hit the subscribe button. Go ahead, sign up to our other newsletter, even if you're on one of the other ones where we do some more active trading. Then sign up to this one as well, so that way you get more insight on wealth building, passive income, and those kinds of things. So this is really focused in on people that are, call it the average Joe, the average person looking to either invest, build their wealth, and make a little bit more money on the side. Thanks for joining me, and I will see you next time.